Russell, welcome. Thanks for being a part of this.
Thank you for having me here.
Of course. So I think the first time we met was probably maybe 4 years ago at Maya's in Casalinda. My wife and I were eating there, and I saw you there with your laptop, and I was like, I think this guy's the owner. So I walked up to you and asked you, and you're like, yeah, I'm the owner, and I love talking to small businesses, obviously, and so talking about small business and talking to small business owners, and I just asked you, how's business going? And so that seed was planted that day. Fast forward a few years, I started a podcast. I saw you at your new location in Hillcrest, and was like, "Hey, would you be interested in being on? I'm thinking about starting a podcast." And you said, "Yeah, let's do it." And so here you are.
Yes, and of course, I don't remember this at all.
Yeah.
Uh, my famous story of my wife is that she came into my restaurant maybe 10 times, and every single time reintroduced herself to me. This is not she wasn't my wife then, but I had known her. I had sold her a place set on Facebook Marketplace
Really?
a long time before that. And then every single time she'd come into the restaurant, this is, 7 or 8 years after that, she would say, I'm Paige, and we sold, you sold us a place set on Facebook Marketplace. And I would say, absolutely, I remember you. How are you? And then next time she would come in, she'd say, I'm Paige, and
Yeah.
you remember me? I'm like, absolutely. And I had no clue. No
Yeah.
clue. It took me a good 8 times to actually remember her. So
Man,
I am great at faking it sometimes.
that's hilarious.
But I'm always happy to talk to people.
Yeah, that's hilarious. Very cool. So you're the owner of Maya's Modern Mediterranean. Can you give us kind of a 30,000-foot view of Maya's today?
Well, Maya's today is different than when I met you. We launched back in 2018.
Okay.
I had been, prior to that, for most of my career as a finance guy. Then I left that world behind and had a chance to run a restaurant group. And from that restaurant group, I acquired one of the restaurants, but I was traveling around the country, and I would see a concept like Maya's in Chicago, New York, LA, San Francisco, all the places I would travel to, and I would always eat there. I was married to an Israeli woman at one point, and so I fell in love with the food and the concept, only I get back to Dallas and it doesn't exist, and I don't understand why. I'm watching nationwide chains or regional chains be very successful, and so I decided to start Maya's, named after my daughter Maya, because it's a name that sort of resonates with everybody. Maya could be a Mexican restaurant, it could be an Indian restaurant. We don't really know, but it's Maya's Mediterranean.
Yeah.
It's a name that resonates with everyone. I have a son named Oren. He's older than Maya, and so he's a little upset about giving Maya the name. But there's already a restaurant called Oren's Hummus in California, and so that name was taken.
Okay.
So I launched a concept with the belief that I know how to run a restaurant. I know how to execute recipes, and I know that I can do better food than Kava for sure. I know I can do better food than the other concepts that I was mimicking. And why can't I make the next great concept?
Yeah.
Why can't I make a concept that is healthy food but great food, and food that you don't need to know what Mediterranean even means when you walk into my restaurant. I want you to not have to know and not be intimidated by the food. So when we initially launched the restaurant, we took all the cultural names out of the food.
Okay.
So kafta kebabs were now just beef kebabs.
Okay.
And we called shawarma, we called it just roast chicken.
Oh.
Well, I abandoned that after about the first 3 months because people could walk in like, where's shawarma? Where's your kafta? And so I'm like, all right, everything's gonna go back to their cultural names, and I'll put in the descriptions, what they are. So with the overall goal of let's make the food less intimidating. You don't need to know what this stuff is necessarily and get scared away by a name that sounds foreign. Just make it something you understand. Everyone understands beef kebabs, chicken kebabs. And so when I watch, especially in the neighborhood where I open in East Dallas, which is a little less culturally accepting of my food than, say, the North Dallas location where I am now.
Yeah.
I wanted people to not be intimidated.
Yeah.
Because if I can be successful in East Dallas, I can probably be successful just about anywhere.
Yeah.
And then first year was the very end of 2018. 2019, we struggled quite a bit to get traction. We saw some ups, we saw some downs. 2020 hits and COVID comes along, and I don't know how I'm going to survive. But lo and behold, we survived. We actually grew our sales that year.
Wow.
The neighborhood really rallied behind us.
Wow.
We did a lot of to-goes. I didn't even have to pivot so much because we were already doing to-goes. And then we came out of COVID roaring,
Wow.
roaring. I mean, everyone finally had heard of us, and we were really doing quite well. Sales were growing at 20-30% a year for a couple of years. Um, at that point, I decided to open up another location, and then all of a sudden, over the last year, it was as if somebody pulled the plug on the restaurant. I don't have an answer as
Really?
to why. Everything I did marketing wise previously that had worked no longer worked.
Hmm.
I wasn't getting bad reviews. I wasn't. There was nothing. The conflict in Israel, Gaza, and me having Israeli food didn't seem to be affecting us the way that I had heard it affected other restaurants in other
Yeah.
cities. And so that wasn't it. I still today am scratching my head a little bit. I don't have an answer. We didn't provide worse food or anything like that.
Yeah. And this was before you opened up the North Dallas location?
This started just about the time. The
Okay.
North Dallas location, unfortunately, was a construction nightmare.
Huh.
It's a tiny little space, 1,000 square feet, a little
Okay.
over 1,000 square feet, which should have taken about 6 months to get going, and it took over 2 years.
Wow.
And there's lawsuits, and I've got
Ugh.
stories beyond that, and that hurt financially.
Yeah.
Um, but the general thought process was, yes, I know that that restaurant will take time to get going. If it follows a similar pattern, I knew I would open up better at the new location because that's a neighborhood that I know very well. I grew up there.
Yeah.
It's got a very Jewish character to it. The people understand the food a little bit more. The demographics are better than the Casa Linda neighborhood for that food. The general business idea was, okay, well, Casa Linda's performing. I've got cash flow coming in. Even if the new restaurant takes a little bit of time to get going, one balances the other.
Yeah.
I'm gonna be fine. I went out and raised some money to get it to bring in some investors for it, and then the double whammy hit, which it took longer to get it open, and then the
Casa
ramp was
Linda.
not quite as the opening wasn't quite as great after the first month as I was hoping for, and
Yeah.
Casa Linda was going downhill.
Man.
So I decided at the end of last year, 2025, to shut down Casa Linda
Okay.
with the belief that if I took the catering business that I built in Casa Linda and moved it up to
Mm.
Hillcrest Village, that I could be profitable in Hillcrest Village almost immediately and keep the business afloat until I could, prove that I actually do have something worth saving and can open up more down the future in the future.
That's cool. So, and I want to get into it more here in a little bit, but what percent of your sales roughly are catering versus walk in and take out?
If you're looking for, let's do historically Casa Linda sales. Casa Linda was about 25 to 30% catering by the time I had built that up.
Wow.
So
Okay.
this is on call it a base of $1,200,000 revenue.
Okay.
So you're looking at $300,000 to $400,000 of catering out of Casa Linda.
Okay.
If I'm able to take that business, and let's just say I take 60% of it, maybe
Yeah.
70% of it, and bring that $200,000 of revenue up to Hillcrest Village. Well, Hillcrest Village is now pretty close to profitable.
Yeah.
I don't need that much more on top of that.
Hmm.
And so far, that's proving to be accurate.
Amazing.
That Hillcrest Village is doing better. Our sales have been up a lot since Casa Linda closed down. We're now exploring some other avenues in that location as well.
Amazing.
Specifically, taking the hummus that we've built to be known as the best hummus in Dallas,
Yeah.
and possibly wholesaling it, putting and branding it, and putting it in
Cool.
other locations.
Nice.
So that's kind of where we're at right now. We still need to drive more revenue out of Hillcrest Village to make it successful,
Yeah.
but we're doing a lot better.
Man, that's so cool. All right. So something I ask everybody is, are entrepreneurs born or are they made?
That is a really good question. I don't know that anyone really has a great answer, right? My father's an entrepreneur.
Okay.
He always was. He never he was an engineer, and he had worked for a corporation. But even inside that company, he had convinced that company to let him have one little division, so that he acquired and then sold, and then he started his own company, and that company, one of them went under, and he started another company, and so he is a entrepreneur. But I also have another brother who's a doctor who has no desire to ever go start something on his own. My sister's an entrepreneur.
Okay.
I'm a little more conservative, and so sometimes, I feel that entrepreneurship doesn't fit me, even though in my character, I like building things.
Mm,
I do like building things. Even if I was to join a company, I don't mind not being the guy who started it as long as I'm part of building something.
yeah,
So that entrepreneurial spirit is still there.
yeah,
Uh, but I like my siblings and my family. I like to run things.
yeah,
I like to be the one. I don't mind failing. To me, failure is not trying.
yeah,
Failure is the person who sits there and thinks about it all the time
yeah,
and doesn't take that risk. There's really nothing wrong with that person. But as I teach my children, failure is the people who just sit there and don't try ever.
yeah,
If you don't get off the couch and give it your best effort, then that's the failure.
yeah,
But failure is not starting a business and that business doesn't succeed. Lots of businesses don't succeed. Doesn't make
yeah,
those people failures.
yeah,
So I don't especially when talking about Maya's and the fact that Casa Linda closed after 7 years. First of all, 7 years for a restaurant is actually pretty
it's
a
very
good run.
good. Yeah,
But ultimately, I did take most of my life savings and it's gone. I still have a brand that's worth something, but ultimately, I have created experience for myself that I'm going to take. I'm still young, and I'm going to use that
yeah,
experience and potentially open up more Mayas. Still,
yeah.
I'm also leaning back on my finance roots, and I've started work as a fractional CFO.
Oh, cool.
So I've got one client so far on a limited engagement that I have helped guide through a cash flow crisis, and looking for others as well.
When did you start doing that?
I started back in November when I realized I was gonna close down Casa Linda.
Yeah,
I started putting feelers out, and then I just had a million meetings. I've been
uh,
networking like crazy,
yeah,
um, contacting some of my old cohorts and previous companies, and, I didn't tell you about my background beforehand, which is, I was a finance guy. I got my MBA from SMU
okay,
back in 1997. I went to New York City and worked in finance for a while for a real estate trust. Then went to work for several different companies doing finance, where my goal was to help that company grow.
mm,
I want to be the person who helps a company figure out their capital structure, whether you want to use debt, you want to use equity. How are we gonna pay for things?
mm,
How are we going to make sure we have enough cash coming in to handle everything?
yeah,
And that was fun in many ways. I love the aspect of helping a company thrive and grow and do whatever it needs to do.
yeah,
One of them was a telecom company, and another one was
mm,
a turnaround for an outsourcing business that had got acquired by a private equity firm.
mm.
Another one, I went to Blockbuster to help turn that
Wow,
company around. That was
wow.
the last few years of Blockbuster, and I can sell you a story today on why Blockbuster should have made it or could have made it.
Really?
I can tell you a story.
Yeah,
And my job at Blockbuster was actually, as the corporate treasurer there, was to make sure we didn't die.
mm,
And I had to go to the movie studios, and I had to go to all of the suppliers and try to convince them that we were worth the risk still.
mm,
Don't pull our funding, don't pull our credit terms. Uh, and we did it until we couldn't do it.
yeah,
And until the weight of the debt of that company just was too much and took the company down. And a
mm,
lot of people say that it was Netflix that took the company down, and that is just not the case.
yeah.
Blockbuster had a far better offering than Netflix.
Wow. Huh.
But it was, Netflix had a way better capital structure,
Yeah.
and so they didn't have the lead weight that Blockbuster had with it, which is every for every dollar that Blockbuster brought in cash, close to 50 cents of it was going to pay back debt.
Wow.
You just can't invest in
No.
your own brand at that
Yeah.
point. So it's a losing situation there.
Man, that's wild. So your finance background, can you share with us how you grew up and just, I mean, family life, early childhood, and just all the way through? Just a brief snapshot.
I grew up here in Texas. I was born in New Jersey, but to Canadian parents. But I was 4 years old when I moved to Texas, so Texas is my home.
Yeah.
And grew up in a Jewish family. I have two brothers and a sister,
Hmm.
and then I now have four other stepbrothers who are very much like my brothers. But
That's
that didn't
cool.
come on until I was about 19 years old or
Yeah.
18 years old. But 40 years later, I don't. really differentiate between them all
Yeah.
that much. But the growing up family, 2 brothers and a sister who we were all 1 year apart.
Wow.
My parents were very efficient.
Yeah.
As my father tells the story and my father and mother tell the story, in the late 1960s, the Vietnam War raging,
Yeah.
the exclusion at one point was if you had 1 child, you were not eligible to be drafted. And then they moved it to 2 children. My parents said, "We're gonna get ahead of this and have 3 children."
Yeah.
And then my mother said, "Well, you can't have 3 children. You have to have even numbers so they play
Yeah.
with each other." So
That's
so
funny.
I'm the logically born child, is all I
Yeah.
am.
Yeah. That's fun.
It wasn't that they desired 4 kids, is that they just so we grew up in a household of, my mother, if she listens to this podcast, is gonna love this part. Fiscal and personal responsibility
Mm.
was about the biggest thing beat into our heads.
Wow.
And I don't mean beat into our heads physically.
Yeah.
I mean drummed into our heads.
Wow.
Both of my parents had very, very difficult upbringings. Very difficult. My mother, her mother passed away when she was a very young age, I think 2 years old,
Wow.
and she was passed around among family members until her father could stabilize his life and get remarried and was able to take care of her and her siblings or her sister. So she brought that into her parenting, which was you are going to be able to take care of yourself. You're going to get an education and you're going to learn to use money
Mm.
properly and you're going to take care of yourself and you're not going to be dependent on anybody else.
Mm.
And that was really, really a theme of all my siblings and I.
Mm.
We had a wonderful household. I wouldn't call it the most loving household only because my parents just had such a tough upbringing. For
Mm.
them, they didn't experience a whole lot of loving in their parents. And so our parents were a little bit tougher in that department. Um, I'm so proud of my mother today, and I might cry saying this. She is still alive, by the way. Uh, that she, later in life, got to experience love on her second marriage,
Mm.
and then finally figured it out, and finally
Mm.
became that mother, that loving mother that I sort of missed out on as a child.
Mm.
And so uh, we grew up in a household where everyone worked. You had chores. If you wanted an allowance, you had to do your work. And I have then translated that to my children, which
Mm.
is they associate if you want something, my children will usually walk in and say, since I closed the restaurant down, they'll say, "Dad, can I wash a window? I need some money to go to the store."
It's amazing.
Yeah, or typically before that is, "Hey, what do we need done at the restaurant? Can I come and wash all the baseboards at the restaurant and clean out the bathrooms? And will you pay me $20 if I do that?" My son, however, was actually an employee there at the restaurant,
Wow.
and he worked and he was quite good. I
Wow.
mean, he acted like an owner. It was really wonderful.
Wow.
But that's all the remnants of my childhood.
Yeah.
So I went, I grew up here in Dallas, went to Richardson High School.
Yeah.
All of my siblings graduated from Richardson. All of my siblings ultimately graduated from the University of Texas, including my
Okay.
stepbrothers. Uh, and all of us had a work ethic that said, go to school, you can be an entrepreneur after that, you can start a business. All of us got advanced degrees, and all because of the upbringing of my parents, the constant belief of education and hard work. And if you have those things, you can accomplish anything in life,
Mm.
and you need to be self sufficient.
Mm. So I know you went to SMU for your MBA.
Correct.
Where'd you do undergrad at?
I went to University of Texas for
Okay.
undergraduate.
Okay.
I got a major in public speaking, which is an
Okay.
odd major, I admit. But I went to University of Texas as to wanting to be a government major.
Okay.
I always wanted to be, when I went to college, I wanted to be a lawyer and I wanted to go into politics.
Mm.
And I got to college and that shifted a little bit. University of Texas it does not have a government, they don't have a political science major there. They had, at the time at
Right.
least, they had a government major, but I wanted to do political science
Mm.
at that time. I took a class in speaking, I took a speech class, and the class was taught by the dean of the college, who then pulled me aside and said, "Hey, you're really quite good at this. Let me give you some advice. It doesn't matter what you do in life.
Mm.
You can be a doctor, you can be a lawyer, you can go into business,
Mm.
you can be whatever you want, but if you cannot communicate, you're not going to be successful."
Wow.
And he really spoke to me and said, "Think about doing this as a major, and then you can do whatever you want to do. Trust me, that you're not limited. It's not all doctors are doctors because they were knew what they want to do in 7th or 8th grade.
Yeah.
Some of them choose that path later. Not all lawyers go to undergraduate as a English or business or a government major.
Mm,
There's many paths.
mm.
One of my closest friends is a Wall Street guy, and he was a history major. So
Wow.
it's there are many paths, and so this professor really struck it upon me that if you can learn the concepts of speech, of argumentation, of advocacy, of how to present yourself, you'll do well anywhere. And that
Mm,
has been the best parts of my career. Whenever I'm in a role where I am needed to speak and communicate and build a team and all the things that good communicators do, that's where I thrive. That's where I've
yeah.
always thrived. That's why at Maya's, I've got the best team. I can leave right now. I've got my restaurant. They're getting ready to open. I don't need to go in.
Mm,
Same with Casa Linda. By the time I closed it down, I was probably spending 15 hours a week inside the restaurant. It wasn't a
wow.
massive amount. They
Yeah.
don't need me to cook. They
Yeah.
need me to lead the team.
Yeah.
And they need to know that they've got someone behind them who's gonna back them up and then knows what they're doing, but I built a great team.
Wow.
They're fantastic, and I miss every one of those employees. They are the best.
Wow.
And I made sure they all got jobs too.
Good. That's amazing. Yeah. Well cared for. So UT, SMU, where next after that?
So I moved to New York City,
Okay.
for a real estate trust. I worked for a real estate trust, that was, blowing and going. This was one of the very first real estate trusts to come out of the 1980s. So
Mm.
I won't bore you with the details, but real estate trusts were a structure that was created in the 80s and effectively disappeared.
Hmm.
And a guy that I had known, a family friend, had, along with a couple other companies, had brought back these real estate trusts out of. They had bought a racetrack in California, which owned this bizarre real estate trust structure, and started buying up
Huh.
properties.
Okay.
And then it became an arms race. So there was two companies. There was my company called Patriot American Hospitality, and then there's another company called Starwood. Starwood
Okay.
became the winner in this game because they ended up buying Weston and Sheraton, and they're now
Huh.
massive.
Yeah.
Um, but I was part of this small deal team that went around the world and bought properties and bought
Okay.
companies. And, every week it was, which billion-dollar deal is my little team working on
Wow.
out of New York? And it was a lot of fun. It was an incredible experience. I actually got to travel around the world, and,
Wow.
I was an analyst. I had a lot of responsibility for an analyst, and in fact, we had so many deals going that sometimes my boss would say to me, "Get on a plane tomorrow. You're going to Colorado to evaluate this deal." And I would say, "I don't know anything about this deal." "Well, you figure it out, and by the time you get back, you're an expert, right?" I'm like, "I guess." And the
Wow.
deal was to acquire the operating structure that owned the Colorado Avalanche, the Colorado Rockies, the real estate, which was the building. No, it was the basketball team and the hockey team, not the baseball team. The basketball team, the hockey team, a movie studio, an in hotel room entertainment system. And I came back and I'm like, this is an amazing deal. We
Mm,
should do this deal, but it's an
mm,
amazing deal. This deal has nothing to do with us.
mm.
I'm like, okay, thank you. Move on. Next
Huh.
deal. Another great deal. I
Okay.
get back from I had gone to this is 1997, 1998-ish,
Yeah.
where American Airlines used to have these deals where you on Tuesday when they would release fares for the weekend, and they may
Okay.
still do this, but you could fly to New York to London on a last minute notice for $250.
Oh my
Right.
gosh.
So I know it sounds like something from 1950 or whatever,
Yeah.
but no, they would release these, have empty seats, and they release these last minute fares. So I go to London for a weekend to meet up with a friend, and I have a party all weekend, come back. I haven't slept at all. I've got my suit on. My boss says, "Get your coat on. We're going to meet Donald Trump."
Oh my
Okay.
goodness. This was what year again?
This was 1998-ish.
98.
Yeah.
Okay.
We're going to meet Donald Trump. Why are we meeting Donald Trump? Well, he's got a building down on 40 Wall Street, and he wants to turn that building into condos and hotels, and we're going to be the hotel associated with it. He's going to take the condos, and we're gonna use one of our brands that we've acquired, and um, so yeah, we were doing a deal with Donald Trump for a
That's
while.
cool.
Yeah, and
Very cool.
he was quite a nice man, Donald Trump.
Yeah.
I didn't meet him that much because he typically would come in and kick off a meeting. So you would
Okay.
kick off, hey everybody, I'm so happy to
Yeah.
have you here,
Yeah.
and then I'm gonna let my team handle this. And I swear they had a button that they must have done. Either that he had a camera or a button or something. He must have known because he always would show up about a minute before the meeting ended. Oh, I'm back, and oh, you're wrapping up. Oh, well, I hope everything's going well. I will, I'll get notified afterwards, and you guys let me know how everything was.
Huh.
And my building actually connected with his building in the lobby. So
Okay.
this was the IBM building I worked in. His building's on the other side, the Trump Plaza, and our building's connected down in the lobby. And he's what people say about him. It was actually true that he's gracious and he's good with names.
Hmm.
And so I would see him in the lobby, and I'm walking through one day, and he's like, "Russell, how are you?" This is while we're doing a deal. And
Wow.
remember, I'm a junior analyst in those deals, but there's only three of us. It's me and a couple other
Yeah.
guys. How are you? I'm like, you remember my, you know my name? Yes. What are you doing for Thanksgiving? Why don't you come to the Macy's Day Parade that we're having, the watching party?
Wow.
And I'm like, I can't. I call my whole family. I'm like, Donald Trump knows who I am. And then the deal falls apart.
Uh,
Deal falls apart. We walked away from the deal. He was nasty. He was angry about it. He actually wrote an article. He wrote a letter to the editor. Thank you, Patriot American, for backing out the deal because I'm going to be rich now that we're going to do so great in this deal. So then I walk into the lobby. I'm like, "Hello, Mr. Trump." And well, he looked at me like, who the hell is that guy? Once the
really?
deal was off, he had no need for me anymore.
It's all
It's
business.
all business. So that was my Donald Trump
Man.
experience.
Gosh.
But everything you see today, well, a little bit different today, but
Yeah. Yeah.
most of the things you saw today would, that I experienced back then are the things you see today, which was a guy who's could be both gracious and then also crazy. Like this
Yeah.
whole writing a letter to the,
Yep.
and then bitter
Yep.
and childish. All those things exist in the same person.
Yeah.
So I got to
Man, that's
experience Donald Trump in my
wild.
career.
That's wild.
Yeah.
Okay, so what'd you do? You stayed in finance,
I
basically.
did, and this is an important part of my career.
Okay.
So the real estate trust that I worked for imploded. We did something that should never be done, which is real estate. You can use debt for real estate. We were a publicly traded company, and the debt markets had just crashed because of the long-term capital, the big at the time capital market event that made all of a sudden it was impossible to borrow money for just a short period.
Hmm.
And so we made a decision to borrow money and use our stock as collateral,
Okay.
which in the finance world, that's a no-no
Mm.
because if the stock drops, you have to keep putting more stock in. You have to keep adding more stock, and you're
Mm.
diluting your own stock. And so it's what they call a death spiral. In our defense at the time, the high flying stock, and effectively an overvalued currency. We're like, okay, well, the stock drops. We still have a currency that's really overvalued. It can drop by this much and it still, makes sense for us. Well, it did drop by this much. It dropped by, this
Mm.
much. And a bunch of private equity firms had to jump in and save the company. And they closed the office I was working for down. And I had gone to my boss at the time and said, "Hey, you know that when this deal is done, we're all being fired, right?" He's like, "I can't speak for you. Maybe you can get a job. I'm going to be
Mm.
fired for sure." I said, "Well, I can't wait. I can't do all this and then get fired." He said, "Okay, well, give me 24 hours. I'll get back to you." So I walk in my office the next morning. He says, "If you stay I need you to stay to the end to get this deal done. Like we need your help. If you stay, I'll give you this amount of months."
Okay.
So big enough money. It was a like over a year's salary for me
Wow.
in New York City. So I get the deal done. I get an extra bonus on top of that. I write a big check to my student loan company, go to Europe with my brother, travel for a while, come back, and start another job. And this is while the internet was booming.
Okay.
The internet was still the dot-com bubble was inflating.
Yep.
And I found a company that was a data center business. And I said to them, what just happened in my real estate world is going to happen in the internet world.
Mm.
Okay. And the companies that are prepared for the future, that have built a business plan, and you can say whatever you want in the public about how clicks and all that stuff, but you better have a plan for when the bubble bursts.
Mm.
And they're like, yeah, we need to hire you for that. So I was the corporate treasurer for a data center business. The only trouble is they said that and didn't actually want to do that. They
Mhm.
wanted to spend their money on, and one of the most egregious expenses was the employee of the month Porsche they decided to have.
Oh my goodness.
So they bought a Porsche, and then every month someone else got to drive the Porsche. Only it really wasn't every so it was the CEO, and then the next person was the CFO that drove it. The next person back to the CEO, and these were the dumb stuff that I saw during the dot-com bubble.
Yeah.
And I've taken that part of my career everywhere I go, which is always think about the downside,
Mm.
the what ifs. And that's what a really good finance person does. They are thinking about options.
Mm.
What happens if the unthinkable happens? Yeah,
Yeah.
oh, sure the stock can't drop. Sure the debt market can't end. Sure this it's going to go forever. The dot-com is going to go forever. I mean, the internet is the new thing. It's going to go forever. No, there are
Yeah.
always bubbles, and there are always inflection points, and there are always, and you need to be prepared. And a
Mm.
good finance executive prepares their company for those eventualities.
Mm.
And that's what I did. I helped take the next company I went to. I went to Breaker International, and I was a director of finance there. And then I went to a company called Stream Global Services and was a corporate treasurer there. I went to Blockbuster, and I went to telecom company, and I helped these companies do these very things to try to always have a safety net, try to always have a future by sound financial decisions.
Mm. That's great. And then, so when did the idea of owning a restaurant come into your mind?
So that I had all those companies I mentioned. Those were Stream, Genban, another company called Source HOV. These were all private equity stories.
Okay.
Stream was a very successful exit. We took a company that a private equity paid about $4 million for and sold it for well over $250 million.
Wow.
Um, Genban was recapitalized and was always doing layoffs. Very frustrating company. Fun company to work for. I love the CEO there, Charlie Vogt. I love the fellow employees. Frustrating company to work for
Mm.
because they were always focused on this term in the finance world called adjusted EBITDA. I
Okay.
don't know if you ever heard this term.
Mm.
If you hear it, run. Adjusted EBITDA is the biggest BS term on earth. EBITDA
Mm.
is how companies measure themselves. It's a measure of their cash flow or their earnings before some of the things that. So the earnings before interest, taxes, depreciation, amortization. Two of those are non-cash: depreciation, amortization. Taxes everybody has to pay, so you really should value a company on taxes. And interest is a reflection of the amount of debt a company has. So you want to pull that away to try to come up with the value of a company. Adjusted EBITDA is supposed to be some sort of evaluation of if it's a kind of a what if. If we cut a bunch of employees and those employees don't add to revenue, then our new EBITDA next year should be this.
Should be.
Should be this. That's right.
Yeah.
Or if we acquire this company and these things happens, this should be our things. And it's this big game of stuff, and it's a game.
Yeah.
And so it's really frustrating because I don't think at that point you're building value. You're creating, in my opinion, and the finance world agrees for the most part, you're creating fake value. You're creating value for the purpose of trying to find someone else to buy you for a higher price and let that be their problem. And so that was the story at those companies I was with, in my opinion. I don't want to disrespect any of the people that I work with. They might have a different story, but the goal in private equity is an exit. And the goal isn't necessarily to build, back then, these companies, not all private equity, these companies, the goal was, from my vantage point, of creating an appearance of value to sell the company.
Okay.
Which always means you're laying off people, which always means you're thinking about your next restructure or how you're going to sell it. So over the course of 4 or 5 years there was exits weren't as successful as the Stream exit was.
Okay.
And so I was out of a job. I got severance. Each company left me with a year of severance. So I wasn't like hurting for money, but I was really a bitter taste in my mouth. And I had the view of, well, if I'm going to fail, if I'm going to get laid off, I'm going to get laid off from my own company. I'm going to fail going down my ship. So I reached out to my network of people, and I had the privilege of knowing a guy named Jack Baum. Jack was an incredibly successful restaurateur who had started a tech business called Ziosk. Ziosk are those amazing terminals you see inside of a Chili's restaurant where you go in and you can play games on it and you
Yeah.
pay for your tab.
Yep.
But Jack had owned a restaurant portfolio along with Mort Meyerson and was looking for they wanted to exit that portfolio. So they hired me to come in, clean up the restaurants,
Okay.
sell them off as a group, sell them off one by one, two by two, however I needed to do it. Keep a few key ones, but really they wanted to be out of the restaurant business.
Hmm.
So I had a chance to run my own company for the first time.
No way.
And these were restaurants in Seattle, New York,
Yeah.
Los Angeles, Nashville, all over the place. And so, as I said earlier, I got to travel around the country. It was to help clean up these restaurants, motivate the teams, figure out what to do. I mean, I'd never really run a restaurant before. Most of these restaurants had been around for 20 something years.
Wow.
So they knew what they were doing. This is the old remnants of the Cozy Mel's chain that was owned by Brinker at one point. Excuse me. They knew what they were doing. And they taught me a lot about running restaurants, but I also could see some of the inefficiencies in these restaurants and some of the leadership and the marketing that needed to be done. So I built a team here to help me with marketing and the back finance stuff, and ran around the country helping get the restaurants making improvements and growing
Wow.
sales. Some of them were in an awful situation where the best decision at that point was just to shut them down and sell off the real estate underneath them.
Wow.
Some of them were performing quite well. Every one of them had a unique situation. My favorite one was in La Jolla, California.
Okay.
So we had a restaurant there, was performing okay, was making a little bit of money, wasn't killing it. I think it was a 3-4 million of revenue restaurant. Uh, had seen its better days. Landlord, we had the renewal for the lease coming up, and the leases all had long renewals. We held the options, 5-year options, but like 25-year options. I mean,
Oh,
it
wow.
was we controlled the real
Oh,
estate. The landlord could not do anything without us. So we get a call one day from the landlord, "Hey, your renewal's coming up, and I've decided to let you out of your lease if you would like. Now, we'll let you out of your lease. We're not going to charge you a thing. You can get out. I don't think you're making any money there." So Jack says, "This doesn't make any sense. This landlord, they want us out of there. Why do they want us out of there? Would you go do some research? Go find out. None of this makes any sense to us." Well, Jack was right. The landlord had already filed to demolish the building,
oh, wow.
and he needed us out of there. So we said to him, "No, we're good. Here's our renewal paperwork. We're gonna sign a renewal." And landlord came back and said, "No, you can't do that. We'll pay you $100,000 to exit your lease. We're doing you a favor. You're losing money here. You're not making that much money. We'll let you exit your lease for $100,000. We'll pay you $100,000." "No, no, we're good. Thank you so much. We're gonna renew. Here's our paperwork." Well, at the end negotiation, we got $3.2 million for that restaurant.
Wow.
Yeah, and that's the genius of Jack Baum. This is a guy who uh, I don't know if Jack ever played poker, but he certainly was the guy at the table who knew what you were holding,
Wow.
and it was his job to know what you were holding. Now, fast forward, I sold a couple of restaurants, closed a couple of restaurants. Um, I decided to buy one of the last restaurants from the group, which
Okay.
is the Cozy Mel's in Wheaton, Illinois, because at that point, we're down to just a few restaurants. My mandate was mostly completed. I was gonna either be out of a job or
Yeah.
have to go do something else with that company. We could have potentially found other consulting contracts. You know, the company was called Sagebrook Management Consulting.
Okay.
So I did bring another restaurant that hired me to give them advice, but it was a little bit of a crossroads. So I decided to buy the Cozy Mills
Okay.
in Wheaton, Illinois.
Okay.
Well, now I'm on the other side of the negotiating table from Jack, which is, oh my God,
Wait, where are you living at this time?
here in Dallas.
You're living here in Dallas, so remotely running.
Yeah.
Okay. Gotcha.
So, but I was at that point still running around the country, not
Yeah.
seeing my kids very much, my son, and my thought process was, I'm going to buy the Cozy Mills in Wheaton, Illinois. It's been around for 25 years. It's profitable. It's going to be mostly a passive investment. They don't need me there on a day-to-day basis. I'm gonna get a little financing to put in some money into the restaurant, and it needs a new roof. Um, but I have to negotiate with Jack to get this done. And now this is the greatest negotiator I've ever met in my entire life. And I've got to negotiate against him. And the negotiation got so contentious and ugly between me and him that we didn't speak for a whole year afterwards.
Really?
Yeah, it took a funeral that we were both at for him to come to me and say, "Hey, the guy who had died, Jack said to me, he would have wanted us to make up."
Mm.
And I said, "Oh, thank you so much."
Why was it so contentious? Is it because y'all both knew the industry and y'all both knew what it was worth so well, or what?
Yeah, I mean, Jack, I don't know if he believes in win-win. I don't think he cares about win-win. It's a matter of winning for him.
Mm.
He's not opposed to a win-win. He knows what he's got the value of what he wants.
Okay.
And I had the value of what I wanted, and it just became bruising.
Yeah.
And nothing unethical.
Yeah.
On his part. Just you're on the other side of the table from Jack Baum. Again, he's about as savvy as it gets in terms of valuation and strategy for a negotiation. And I've learned a lot from him.
That's great.
He's the greatest, and we're now back to good friends. And
good.
And I hope he gets to hear this because Jack, you are my mentor. You're the best.
That's great. Awesome. Okay, so you bought that restaurant. You thought it was going to be a passive income stream? What, maybe you thought you were going to travel there once every couple weeks or every week or something like that?
The initial thought was maybe once a month I'd travel there, maybe even go down once a quarter.
Okay.
Then I would start figuring out exactly what else I wanted to do. I had the thought maybe of opening up into my own restaurant at that point.
Okay.
But I still wasn't quite sure that's where I wanted to go.
Wait, okay. How'd you finance that? Because this is important. I want to, did you have some money saved? Did you just take out an SBA? What'd you do?
So for this particular transaction, I acquired the real estate and then did a sale leaseback transaction to finance it. So let's just use round numbers. I bought everything from Jack for about, just round numbers, $3 million.
Okay.
I found a buyer for the real estate at $3 million.
Okay.
They bought the real estate.
Okay.
And then gave me, I had to lease it back from there.
How did you, and it's just because I don't know, but how'd you buy it first and then find a buyer? Or can you do that simultaneously?
They close simultaneously.
Okay, cool.
It actually, there's a little bit of a spread in there. So there's fees. And then there was some money that I needed for capital expenditures for the restaurant.
Okay.
So let's just say I bought it I sold it, the building for $3 million, but bought the business from Jack from $2.7 million.
Okay.
So the extra $300,000 was to pay for the roof and the fees and all that stuff. But so that's how I financed it. I didn't have to pay $1 out of pocket. And you can argue at that point that I bought nothing, right? So in fact, when I got divorced from my wife, they were saying my business is worth $3 million. I said, no, it's worth zero. I paid zero.
Yeah.
I bought a building for 2.7 and sold it for 2.7. So it's worth zero. Yeah. It's worth when anyone really wants to pay for it.
Yeah.
The frustrating part was that passive investment suddenly became not passive.
What happened?
Two things happened. One, we were the only Mexican restaurant in the area. We were the premier Tex-Mex restaurant. Been around for 25 years. Well, all of a sudden, two other Mexican restaurants, Chuy's and Uncle Julio's, decided to open up within a 2-mile radius of my restaurant.
Oh my goodness.
All of these are 10,000 square foot restaurants. Big suckers. There's not enough room for 3 Tex-Mex restaurants in Wheaton, Illinois.
Yeah.
In a 2 or 3 mile radius. Chuy's only lasted about a year or two there.
Wow.
Before they closed. They didn't last. And we got a little bit of a bump before. So at that point, my sales had started dropping. Chuy's had nowhere near hitting their numbers. And Uncle Julio's, I don't believe, got anywhere close to hitting the numbers that they were expecting until one of them went out. Then Chuy's went out of business, and there's probably enough for me and Uncle Julio's. Then fast forward. Then the restaurant was doing okay. I decided to open up Maya's.
Okay.
And then COVID hit. And
so you opened up,
killed that restaurant.
You opened up Maya's 2018. So in 2018, you were still running this other restaurant.
Yep.
And opened Maya's. Okay, got it.
Right. I decided every time I flew to Chicago to visit my restaurant, I would go to another restaurant in Chicago called Naf Naf Grill.
Okay.
Because I thought their hummus was outstanding, their food was outstanding, but I knew I could do better than it.
Huh.
And they had a line out the door. And they had gone from 2 or 3 units to 30 units in just about 4 or 5 years.
Wow.
Really had done well with their growth. The uh, so that was my genesis for opening up Maya's.
Wow.
And I tried to bootstrap it.
Mhm.
Excuse me. And I know this is a question you wanted to ask. Can you bootstrap a restaurant today?
Yeah.
You cannot bootstrap a restaurant today.
Mm.
That was one of my that's one of the things that I would tell someone today, if you're opening up a restaurant, do not bootstrap it
Why?
because you're thinking like the 1980s or 90s.
Mm.
I am 55 years old in a few weeks, and my downfall at Maya's, in my opinion, is that I still think like a 55-year-old.
Mm.
And that hurts me. It helps me in many ways. I have experience and I know how to run teams, I know how to run restaurants. But if you open up a restaurant today, you better be brand ready.
Mm.
You better have everything beautiful on the inside. You can't bootstrap it and with the thought of, it doesn't matter. The decor doesn't matter. It's the food and the service that matters. If you have good food and good service, which is my older person brain, that's all that matters. People will find you no matter what. Keep a clean restaurant, have good food, good service, and they will find you. Disagree now.
Mm.
You need to be TikTok ready, Instagram ready. You need to have influencers all before you open up.
Wow.
And you're going to have to pay for it. And you're not going to get there by bootstrapping it.
How does someone do it today? Like if they were actually maybe you can finish up where you were going with that. But I do want to know at some point how would I'll set the scenario. So say I make $60,000 a year working a 9 to 5,
Okay.
just kind of an entry level after college job, and I want to open up a restaurant. Take me through. Is it possible? What can I do?
Well, I might tell you to start a little bit small. I would not try to find if you're looking for 4 to 5,000 square foot spaces, you just, it's going to be hard to do that for under $1 million.
Yeah.
Um, you might start with a food truck,
Okay.
and the cost to enter a food truck is much lower to build out your concept, and that's probably a pretty common way of doing it. I've got a friend who started Vita Bowls. Vita Bowls, he basically he took the back room at a yogurt store and built his presence online only,
Wow.
and then he's now expanded to his own store.
Hmm.
I know people that have started with food trucks
Hmm.
and then moved to it on built up that brand and that business and moved to Easy Slider is a good example. They've got a couple food trucks and they now have a storefront.
Hmm.
So that's a good way to do it on a lower cost entry. But in every one of those cases, you're building your brand.
Hmm.
And if you want to open up, if your idea, so I went to college with the guys who started Pluckers, which is a wing
Yeah.
concept. Love Pluckers. They bootstrapped it because you could do that back then. The
Really?
brand and creating an Instagram brand and a TikTok thing was nowhere near as important for them as having a great location on campus in Austin, serving wings, which nobody was doing at the time, really, and a great atmosphere of beer and liquor. And they created a
Yeah.
bar, but they were able to bootstrap it. And then they went out and created. They proved their concept, they went out and got investors for the next concept, and they've repeated that formula over and over again. And they're
Mm.
killing it. They're doing great.
Yeah, I've heard you mention brand several times. How does someone create a brand?
Well, I would probably enlist someone younger than me or with a marketing mind. My wife is exceptional at this stuff, and you would need to be pretty savvy about how to use social media today, and the influencers. The influencers, to me, as an older guy, seem so stupid
Mm.
at first.
Yeah.
I mean, so stupid.
Yeah.
What, somebody comes to me and they go, "Oh, I've got 3,000 followers, and you should give me a free meal and pay me $500 to promote your brand." I'm like, "What?
Yeah.
Are your 3 followers all in my neighborhood? 3,000 followers all in my neighborhood? How do I know you don't have 3,000 followers in India?
Yeah.
I don't even understand this all." But I'm wrong. I mean,
Uh,
they are the influencer market. A good influencer can come to you with a package of their statistics and how that's relevant to you,
mm.
and you can come to an agreement with a value of whatever is right for you. And if I had to do it again, I would have done that from the beginning. I'll tell you that the one restaurant company in the world right now that's killing it is Chili's.
Mm.
And Chili's figured out not even on purposely, that TikTok, they lean right in. They became a TikTok trend because of their ooey gooey mozzarella sticks, right?
Yeah.
And they lean right into that and
Mm.
immediately started promoting their mozzarella sticks, and they started promoting their other items on their menu using TikTok and influencers. They started spending a lot more money on influencers than they did on their TV campaigns because the bang for their buck was huge.
Wow.
And a Chili's these days is packed with young people
Mm. Yeah.
and families who have young people in it who
Yeah.
got their family who got their families to go to Chili's. They are absolutely killing it, and they're right. That is how you have to do it these days.
Mm.
Be part of a trend.
So are y'all working with influencers right now?
Not
No, not
really.
really. Yeah.
I'm not. I don't have a lot of money right now to throw at influencers.
Yeah.
Um, if I decide to launch a hummus business, that's how I'm going to launch it.
Yeah.
I'm going to go with the influencer line. I'm not. So the old, and I'm thinking about doing this right now. We make the best hummus in all of Dallas. It is people come from all across Dallas to have our hummus. I know I can create this brand and this product and do it on a mass scale.
Okay.
I know I can. But it becomes, how do you market it?
Yeah.
The old way of marketing it. So if I was to say, go back 25 years, how would I market this? Well, I'd start going to farmers markets, build a little presence, maybe at farmers markets, selling it there. I would probably try to go to maybe 5Ks and 10Ks and set up a booth there
Yeah.
and build my brand that way and build a cachet. Then I might go try to get into a supermarket, and I would have to go from supermarket to supermarket and stand there and give out samples and oh, you try my hummus. And that is an older way of thinking.
Mm.
If I was doing it today, I would immediately get influencers who'd start promoting the hummus immediately.
Save you a lot of time. Yeah, because I don't
Yep.
think about like every Saturday you're at the farmer's market, you're looking up all
Mhm.
the races, you're traveling around, you're losing family time. Or you can send one influencer some money and some product and you instantly get all that
That's right.
return. Yeah.
And you'd get way better return, way
Mm.
better way of doing it. And that's why I'm considering doing it, because I wouldn't have to. I don't have the time anymore to go to farmers market on
Yeah.
Saturday. I just
Yeah.
don't.
Yeah.
I can't go to a race because I want to be on my bicycle on Saturday morning
Yeah, and
or
I
with
mean,
my kids.
family's more important, than spending all your time hoping that something works. Yeah,
Right.
yeah, very
So
cool.
that's the way of doing it today, and that's what I would tell people if you're starting your own business in the restaurant space or in the product space is be TikTok ready or social media. TikTok may be the brand, the app of the day. I don't know. It
Yeah,
might be another one tomorrow, but be social media ready.
yeah.
And if you don't know how to do that, you better find someone to do it.
Mm. So branding, social media, and start. If you don't have money and you can't get investors, start small. Start in the back of a kitchen,
Yeah.
food truck. Just figure it out.
Yeah,
Hmm.
and there are loans available. I mean, there are different non-traditional financing available. There are SBA loans available. They typically like you to be a little bit,
Mm.
more seasoned. They don't. I don't know how they are in terms of giving out loans to college kids.
Yeah,
But this is 2026. There are more non-traditional loans out there than ever before.
mm.
I actually used a company at one point during the fundraising for the second restaurant. I used a crowdsourced debt funding company.
Hmm.
I suddenly can't think of the name of it. I'm so sorry. When I think of it, if
Yeah,
it pops in my head, I'll let you know.
yeah.
So it's an interesting concept, and there's lots of these out there, which is you will raise money using almost like GoFundMe, only it's an actual debt offering. So GoFundMe is effectively equity, but this is debt. So this has terms, so
Okay.
an interest rate, a payback time, and um, you then have all the people. You go out to the people, your target audience, family, friends. In my case, I already had a pretty large existing follower base for Maya's, and said to them, if I'm looking for investors for Maya's too, you're going to be coming in as a debt investor.
Okay.
Here are the terms. But I'm also expecting you, if you want to see your debt get paid back, you promote for me.
Oh, cool.
So the best path for you to get paid back your money is to promote my brand. And so that's the basic concept is you give them a platform to help give them a way to help you promote. So give them social media messages that they can then blast out on their social media
Yeah,
channels.
they're taking ownership. They are part of an owner.
And now they're
Yeah.
part owners, right?
Yeah.
No, they're debt holders. And I had a very successful offering. I was oversubscribed. I originally set out to raise about $50,000. I ended up raising about $75,000.
Amazing.
I had to turn people away at the end, and then as soon as I closed it, I had people come in and say, "Oh, I would have bought all of it from you."
Of
Well, that would have been nice to write one
course.
check.
Yeah.
Um, I was able to pay back all those investors in full. When I brought in another set of investors, I took them out completely because the interest rate on that loan was pretty high.
Okay.
But it's available to people.
Hmm.
It's not hard to find a non-traditional loan right now. It is
Wow.
not hard to find all. This is 2026, and there's a lot of capital out there. People want to use their money, and they want returns on their investment.
Wow. So, I mean, you were in finance in the restaurant industry. You saw a ton that prepared you for what you do now with Maya's. What would you say to someone, or what would you teach someone that's wanting to start their own restaurant that you knew going into this they probably don't?
Well, a couple things I would say. I mean, if you're talking about the finance side of things, one is don't take on. There are ratios for debt that I am aware of that I probably have violated at this point. But at least going in, you every restaurant pretty much operates on the same metrics. Okay, our food costs really cannot exceed 30% of our revenue.
Okay.
Our rent really it just cannot exceed 8% of our revenue.
Okay.
You need to know that. So if when you work out your deal with the landlord and you calculate your rent and then say, let's just say my rent, I'm going to use round numbers. My rent is now $10,000 a month.
Okay.
Okay, well, back that into the sales I need to do. I need to do $80,000 a month.
Yeah.
Okay, because rent is now 10% of my revenue, and that's the maximum. So now can I do $80,000 a month in this space?
Hmm.
And so that's the things you need to think about instead of just saying, oh, that looks like a good spot. I know I like my food. I don't know, but you need to start. Can I do this?
It's math.
It's
It's
math.
just,
There's
yeah.
a lot. There's a math there, and a
Mm.
good example of that is I looked at a great space. This is over at Mockingbird and Abrams.
Yep.
That's that strip center over there.
Yep.
That's doing quite well. And I looked at that space and said, well, based on the rent there, I have to do 3.5 million of sales in this thing to be profitable.
Oh my goodness.
That's a lot of hummus.
Yeah.
That's a lot of in a 2,000 square foot space. I just didn't see it working. That's just too much for me. I could have. They may very well have cranked out that numbers there.
Yeah.
I just didn't see it. I thought that was a big. My experience had taught me that was a big ask.
Yeah.
So there's a certain set of numbers in the restaurant there that you ought to just be aware of the metrics and work towards those numbers. So then you turn around and say, well, what's my price of hummus? What's the price of whatever product is I'm putting out there? And luckily there's tools out there for you. Input all your recipes, use those tools because you need to price everything properly. The worst thing you do is open up your doors and next thing you know your food costs are 50% and you're out of business before you ever got started because you just didn't price it properly.
Wow.
And then you can't raise your prices like, that.
Yeah.
You can't raise them. You can raise them incrementally, but you can't just suddenly go, oops,
Yeah.
charge $4 a hummus. Now it's 8. So all those people that were paying 4, now they get to double their thing. So you really take the time going in. And this is actually a really good question that you asked because my experience watching other restaurants, like I told you, one point when I was working for Jack Baum, the Sagebrook restaurant consulting business, we were approached really because of Jack's reputation. We were approached by a lot of restaurateurs to help consult with them because they all had the same problem. We're not making any money.
Huh.
We're not making it. We're having crowds every night and we're not making any money. And every single time I came across an idealistic chef who was really good at cooking with no business sense whatsoever. And I see it and saw it and I see it over and over and over again. You'd come in and you'd see a menu with orphans everywhere. So nobody ordered the rutabaga tonight. You throw a rutabaga in the trash.
Yeah.
Nobody ordered that fish tonight. You're throwing the trash. So we would come in and say, Okay, well, no orphans on the menu. If it's not used in 3 places, if this one ingredient you've got there is not used in 3 places, take it off the menu.
Wow.
Okay? Find out what your best sellers are. Have the courage I've noticed your menu here. In the last 5 years, you've added 20 things and you've taken off nothing.
Wow.
So now you've got a menu that's like this, and there's nothing wrong with any of these. And food is not bad, but you need to have the courage to take things off of your menu.
Yeah.
And so this is the finance discipline that I brought to the restaurant is to have the courage. I had to take some things off the menu at the start. I had
Mm.
to pivot after I started the restaurant. When I launched Maya's, as I said to you earlier, we wanted to have a menu. I wanted to be simple. I didn't want it to be cultural. I don't want people to walk in and we are Israeli Mediterranean. That doesn't mean anything to most people. It just doesn't. Not only that, but I also knew that every 3 or 4 years, this is back, already like 2018, and I already been married to an Israeli woman for 7 or actually 10. Sorry, I'd already been divorced at that point, but
Yeah.
I'd been married for 10 years, and I knew that every couple of years there's a conflict in Israel, and anti-Semitism rears its head, and so I'm not going to call my restaurant Israeli Mediterranean. I'm not even associating anything with Israel.
Yeah.
There's nothing Israel about the menu, the decor, the look. It's not important. What's important is just the food, the great
Mm.
food.
Yeah.
And so, um, I wanted to create a simple menu where you walked in and you didn't care where the food was from, you just knew you liked it.
Yeah.
And so I created, instead of having this build your own menu that Kava has, that Chipotle has, that Naf Naf had, that Roti Grill has, I would just create your combinations for you.
Mm.
Shawarma sandwich comes with fries and this sauce. Beef kebabs comes with this side, this sauce. Well, immediately, day one, well, I don't want this side. I want that side. I want this sauce. And it took everybody 5 minutes to order. So
Uh,
forget this. We're gonna
yeah.
we're gonna we're gonna go to the model that other ones have already successfully figured out, which is now you build your own, which is you choose your how you want it, you choose your protein, you choose your side, you choose your sauces.
Yeah.
That proved to be a lot more successful.
Okay.
The problem after that became because the food was so cultural for that area in East Dallas, I had to educate everybody.
Mhm.
Whereas in North Dallas, I don't have to educate
Yeah.
anybody. I had people come in and say, "What's hummus?"
Mm.
And this is every day of the week. "Hi. Oh, this is interesting. What is kafta kebab? What is hummus? What is tzatziki? What is tahini? What is
Wow.
baba ganoush?" The ordering was taking for some people 5, 10 minutes.
What's different about the demographics in East Dallas and North Dallas? Yeah.
East Dallas is a little more diverse.
Okay.
And so on that corner of Casa Linda,
Mhm.
you have quite a range.
Okay.
So on one direction of Casa Linda, the demographics would be to lower income,
Okay.
a lot more Hispanic.
Okay.
The another corner going the opposite direction, you have Forest Hills, which is part flunky, part very wealthy.
Yep.
Another direction, you're going towards White Rock Lake. So you've got very affluent families there who the demographics show that people eat healthier the higher the income they make.
Okay.
And Mediterranean food is associated with healthier eating.
Sure.
Also associated with the higher income people make is the diversity of the food and the cuisine.
Uh,
So uh, what I found is that everyone loves our cuisine.
yeah.
And if you give us a try, I don't really find that. I find the people who like it the least are a little bit of the people who are the elderly people who are going over into the Highland Park cafeteria that used to sit on the other side of the restaurant. It was just too confusing for them.
Really?
Yeah, they would just walk in and be like, "I just want some steak and potatoes,
Or a
yeah,
burger and pizza.
a burger
Yeah.
here." I'm like, "I don't have a burger." Although
Yeah.
my wife would always come in and create her own Mediterranean burger,
Oh, that's
and now
fun.
it's a secret off menu item is the Mediterranean burger.
That's hilarious.
She took
What is it?
3 beef kebabs,
Okay.
put them inside a pita bread,
Love it.
added some lettuce,
Mhm.
some pickles, and some tzatziki sauce,
Amazing.
and she calls it a Mediterranean burger.
That's great.
Yeah.
How cool. Man. All right. So it's 2026. Where is Maya's headed this year?
So, we'll have our 1 year anniversary in a few weeks.
Okay.
Knock on wood. The restaurant is
Yeah.
doing better.
Good.
Still not where we want it to be. Sales are increasing.
Good.
This is the time of year. All 7 years of Casa Linda's existence, my best 3 months were March, April, May.
Okay.
March, April, May. In fact, I jokingly say I make my worst decisions in March, April, May because I'm in the best mood.
Yes.
And it's like, oh, we've had 3 great months in a row. I'm going to open up another restaurant.
Yeah.
We had
Yeah.
3 great months in a row. I'm going to spend the CapEx and fix that, I'm going to get this new piece of equipment here. Whereas I probably need to balance it out a little bit because the summer hits and the summer, it can be pretty tough on some restaurants in some areas.
Was that at Casa Linda as well, or was that just with Hillcrest?
Hillcrest Village far more pronounced than Casa Linda. I mean, I was stunned by the drop off in the summertime at Hillcrest Village.
Wow.
It felt like everybody leaves town up in North Dallas and comes like they leave in June and come back in August.
Man.
And it was for a new restaurant there, what happens is, so both restaurants follow the same pattern. Okay. Both restaurants had great first months followed by a massive drop off.
Man.
And this is not an atypical pattern for restaurants. Everyone's tried you, but you're not part of a habit yet.
Okay.
How do you form a habit? There's lots of ways to form a habit. But the most important way is you've got to stay in their minds. Okay. You could have an amazing location. That's probably the best way to do it. Whereas they drive by and see you every time. That's harder. You pay for a good location, right?
Yeah.
Casa Linda was not a great location for visibility. It's tucked back to the strip center there. Hillcrest Village is even worse for visibility.
Yeah.
It's just really hidden. There's social media, so you can continue to blast yourself out, but you have to push yourself to social media to get them to, so if they follow you, that's easy. Then you can post on your pages and they see it. But how do you get the people who aren't following you? You have to pay for advertising. You build up an email and phone database. Every time someone places an order online, you've got their phone number. Every time someone joins your frequent user club, you've got their information.
Yeah.
But you got to build those habits. And I always say to them, when I hook you into my restaurant 4 times, I've got you. You're coming back. My food is great. You're coming back. I know you're coming back.
Yeah.
I never really once worry about, I never worry about the quality of the food.
Yeah.
I'm not saying we're perfect.
Yeah.
We're a restaurant and we make mistakes. We'll always own those mistakes. And I think that some of the best experiences are when we've made a mistake and I'm almost excited because I get to fix it.
Yeah.
And if a guest lets me fix the mistake, we're going to win that guest for a long time.
Yeah.
The only guest I can never fix is the one that leaves my restaurant and has a problem and doesn't tell me about it.
Yeah.
I've lost them for life.
Yeah.
There's nothing I can do about it.
That's true. I feel like that's rare just in general.
Yeah. I mean, I always tell people, I get a lot of emails. In North Dallas, I have a lot of friends there.
Yeah.
I grew up in the neighborhood.
Yeah.
Between junior high school, elementary school, college, my work life, everything else, I have a lot of people in North Dallas. At least once every few weeks, I'll get an email. Hey, I don't know if you want me to tell you or not, but I went into your restaurant today and the food was great, but your employee was on their phone. I'm like, yes, of course I want you to tell me about it. I want you to tell me everything. Good, bad, ugly. I need you to tell me.
Yeah.
Because I can't fix problems that I don't know about.
Yeah.
I'm not putting a camera on my restaurant or a speaker system where I go, get off the phone.
Yeah.
I long time ago decided that I'm not going to check my sales. I used to check my sales every hour.
Yeah.
On my phone. And I stopped doing it.
Yeah.
They are going to be what they are at that day. People have decided to eat there or not decided there. Very little I can do to influence someone's decision once that day has begun. It's out of my control. I'm always available to my employees. They can call 24/7 if there's a problem.
Yeah.
But I don't check sales as religiously during a day as I used to because it just makes me crazy.
Yeah, I bet. Man. Any last advice you'd give any person that wants to open up a restaurant for their first time or just thinking about the concept of opening up a restaurant?
Restaurant ownership is not for the faint of heart. And a lot of people counsel me not to do it.
Hmm.
And I don't think that was very good advice. I mean, but, my parents, uh, and because they all say the same story. Everyone loves to throw out statistics. Oh, 98% of restaurants fail within the first year. I don't even know if that's true or not. I
Yeah.
don't know.
Yeah.
Um, you're going to be there 20, it's a job where you're going to work 80 hours a week and you're not going to make any money doing it. It's not really a place where you can make money. I don't know if I buy into any of those things. Kava has built an incredibly successful concept and they're publicly traded. And
Hmm.
my friends down at Pluckers have built an incredibly successful concept, and Chipotle and Raising Cane's and Chick-fil-A. These are people have built brands, and Jimmy John's. All these companies have built these brands, and yeah, for every Jimmy John, there's 400 restaurants that didn't make it.
Sure.
But isn't that true for any other business?
Yeah.
What if I tomorrow start an IT business and I don't have any customers? What if tomorrow I decide I'm going to start a software business in the restaurant
Mm.
world because I have restaurant expertise, but I don't get any customers, or
Mm.
someone else does it better than me?
Yeah.
Whatever you do is going to require hard work,
Yep.
and you're going to pour part of your life into it.
Yeah.
And so that's my advice: is know that any business that you do requires hard work.
Yeah.
The one thing that the biggest piece of advice that I would give myself, if go back in time, is don't do it alone.
Mm.
So that's one of I would say like I said, my two biggest mistakes. One, I've already told you about marketing. I just don't know I didn't and don't really know how to market in today's economy.
Yeah.
And two, I and should have taken some kind of a partner, someone else
Really.
to both share the load and to help see things in different ways. Um, my view has always been, well, I want to be the ultimate decision maker, and I don't know that would have changed. Uh, but I could have used partnership.
Mm.
And I know this from my experience in corporate America would be that, when I was in business school, that the best times and the best success comes from having a diverse group of opinions and a diverse
Mm.
mindset, and people thinking about things the way you don't think about them.
Mm.
And even though I believe in myself, it does help to have others with you making those decisions.
Wow. That's super helpful. Man, well, thanks for all the advice and the stories that you shared. I think that's going to bring a lot of value.
Well,
Really
I appreciate you having me here. This is a lot of
awesome.
fun.
Thank you.